Good morning. This is Larry McMillan with the stock market update on Monday, September 29th. So, I guess the big news right now is will there be a government shutdown tomorrow or not? The market doesn't seem to be concerned with that at all, which I find a little strange. But in any case, the SPX chart is very positive. There's support at 65.50 and then several other support areas below that. I think, though, if the government did shut down even for a few days, the stock market would not be too happy with that. But in any case, that might not change things substantially. We have seen a couple of new sell signals come in, so we'll talk about those in a minute. One of them is the McMillan volatility band sell signal that occurred on Friday, and Thursday. And so that will that has a target of about 6,400. It would be stopped out if S&P rose up above about 6750. The equity-only put-call ratios continue to decline, so that's bullish for the stock market, indicating people are still buying calls. We're starting to see our computer analysis program say that these ratios are about ready to roll over. And they have increased over the last couple of days, but that's, to me, is still not significant. I really want to see visible evidence that these ratios have rolled over and begun to rise before I call the sell signal there. However, where we do have a sell signal is in regular breadth, the issues of breadth. That has been poor really for some time. We've talked about this week after week. And now the breadth oscillators have given sell signals again. Partially countering that, though, is the fact that volume breadth, in other words, volume on advancing issues minus volume on declining issues, that has remained very strong. So the institutions are buying the stocks that they like, they're buying a lot of them, and they're not, the ones that are selling, they're not selling too heavy. But overall, the broad market is not seeing the resilience that the few issues that the institutions are buying has seen. New highs continue to outdistance new lows, although there was one day last week, Thursday, where new lows on the New York Stock Exchange were higher than the number of new highs. That was reversed on Friday. So right now, that buy signal is still intact, and everything is still good there. On the implied volatility front with VIX, VIX has remained low. It too is not very concerned about the potential government shutdown, I guess. And so the trend of VIX buy signal is still in place, and the construct of volatility derivatives, in other words, the term structure of the futures, that's bullish as well. So pretty much we have still a large set of bullish indicators. We have a couple of bearish ones now. I suppose if the market backed off and fell through a couple of support areas, we'd start to see some more sell signals come out of these various indicators. But for right now, we're still staying long. We are rolling up positions, of course, as they get deeply in the money, to prevent any kind of a nasty reversal in price from, taking away all of our profits. So I invite you to visit our website and take a look at our newsletters that cover these things on a daily basis. And meanwhile, have a great week trading.